Hey there, let's chat about insurance operations, shall we? I mean, if you've ever filed a claim after a fender bender or wondered how your health insurance processes that doctors bill so seamlessly, or not so seamlessly, you're peeking into the world of insurance operations. It's essentially the behind-the-scenes machinery that keeps insurance companies running. Everything from underwriting policies to handling claims, managing risks, and ensuring customers get what they paid for, all while keeping the business profitable. Think of it as the operational heartbeat of an industry that's all about protection against the unexpected. Without efficient operations, insurers couldn't assess risks accurately, pay out claims promptly, or even stay compliant with a mountain of regulations. In a world where disasters, health scares, and accidents happen daily, strong insurance operations are what make the difference between a company thriving amid uncertainty or crumbling under the weight of inefficiencies. And with tech like AI and big data shaking things up, these operations are evolving faster than ever, turning what was once a paperwork-heavy grind into a sleek, data-driven powerhouse. So, where did insurance operations even start? Well, the concept of insurance goes back thousands of years. Think ancient Babylonian merchants pooling funds to cover lost shipments or Roman burial societies sharing costs for funerals. But modern insurance operations really took shape in the 17th century with places like Lloyd's of London, where coffeehouse chats turned into formalized risk-sharing. Back then, operations were manual, handwritten policies, ledger books for tracking premiums, and couriers delivering claim payouts. The Industrial Revolution ramped things up, as factories and shipping boomed, creating demand for property and marine insurance. Fast forward to the 20th century, and operations got more structured with actuarial science using math to predict risks, plus early computers automating calculations. Regulations kicked in too, like the U.S.'s McCarran-Ferguson Act in 1945, giving states oversight and forcing operations to prioritize compliance. Today, it's a blend of tradition and tech, from legacy systems handling life insurance annuities to digital platforms zipping through auto claims. This evolution reflects how operations have always adapted to societal needs, whether it's covering cyber risks now or maritime perils back in the day. Now, let's get into what insurance operations really entail on a daily basis. At its core, it's about managing the flow of information, money, and decisions across the insurance lifecycle, starting with marketing and sales, moving through underwriting where risks are evaluated and policies priced, then policy issuance, premium collection, and finally claims processing when something goes wrong. Support functions like customer service, compliance, and IT keep everything glued together. For property and casualty insurers, operations might focus on rapid response to natural disasters, coordinating adjusters and payouts. In health insurance, it's more about provider networks, billing codes, and fraud detection. Life insurance operations handle long-term policies, investments, and beneficiary payouts, often over decades. No matter the type, efficiency is key. Streamlining these processes reduces costs, speeds up service, and keeps regulators happy. It's not glamorous, but it's the engine that turns premiums into protection, ensuring the company can pay claims without going bankrupt. One big piece of insurance operations is underwriting, where the magic of risk assessment happens. This is where actuaries and underwriters crunch data on everything from your driving history to a business's fire safety measures to decide if they'll insure you and at what price. Operations here involve gathering info through applications, medical exams, or inspections, then using models to predict losses. Inefficient underwriting can lead to underpricing risks, causing financial hits down the line, or overpricing that drives customers away. Modern operations lean on automation, software that pulls credit scores or satellite imagery for property evaluations, to make this faster and more accurate. It's a balancing act. Too lax, and claims skyrocket. too strict, and growth stalls. Effective operations ensure underwriters have the tools and data to make smart calls, directly impacting the company's profitability. Shifting to claims management, which is often the customer's main touchpoint with their insurer. When you report a loss, operations kick into gear, verifying coverage, assessing damage, estimating costs, and issuing payments. This can involve field adjusters for auto accidents, medical reviewers for health claims, or forensic experts for suspicious fires. A smooth process builds loyalty. A clunky one leads to complaints and churn. Many insurers design standard procedures to minimize leakage, that's overpaying on claims, and combat fraud, which costs the industry billions annually. For auto insurance, it typically follows a 5-step flow: reporting the incident, initial review, investigation and adjustment, settlement negotiation, and payment or denial. This structure improves both customer experience and productivity, especially since most interactions happen during claims. Operations teams use workflows and flowcharts to map these steps, spotting bottlenecks like delayed approvals and fixing them with tech like mobile apps for photo submissions or AI for damage estimates. Policy administration is another cornerstone, handling the nuts and bolts after a policy is sold. This includes issuing documents, updating records for changes like address moves or added drivers, billing premiums, and renewing policies. Operations here aim for accuracy to avoid disputes. Imagine the headache if a renewal notice gets lost in the mail. Digital portals now let customers self-serve, reducing call center loads, while back-end systems integrate with banks for auto payments. In life insurance, this extends to managing investments tied to policies, ensuring funds grow to meet future payouts. Efficient admin ops cut administrative costs, which can eat up 15–20% of premiums, freeing money for better rates or innovations. Risk management in insurance operations is huge, because insurers are basically in the business of managing risks for others while controlling their own. This involves identifying, assessing, and mitigating threats like natural catastrophes, market fluctuations, or cyber attacks. Operational risk, in particular, is tricky. It stems from failed processes, people, systems, or external events, and it's hard to quantify because causes are so varied. A solid approach goes beyond formulas. It reviews the company's activities holistically as part of an enterprise risk management framework, estimating inputs for models that help predict and prevent issues. For example, operations might implement redundancies in IT to avoid downtime or train staff on compliance to dodge fines. In reinsurance, where insurers buy coverage for their own risks, operations coordinate complex contracts to spread exposure. Getting this right protects solvency and builds trust with policyholders. Compliance and regulatory operations keep everything above board, as insurance is one of the most regulated industries. In the U.S., state regulators oversee solvency, fair practices, and consumer protections, requiring detailed reporting on reserves, investments, and complaints. Operations teams handle audits, filings, and adherence to laws like HIPAA for health data or anti-money laundering rules. Globally, things like Europe's Solvency II demand robust capital management. Tech helps here. Compliance software tracks changes in laws and automates reporting, but it's labor-intensive. Slip-ups can lead to penalties or shutdowns, so operations prioritize training and monitoring to embed compliance into daily workflows. Customer service operations in insurance are evolving from reactive call centers to proactive, omni-channel support. This means handling inquiries via phone, email, chatbots, or apps, often 24/7 for global clients. Operations focus on metrics like first call resolution and average handle time to gauge efficiency. Personalization is key. Using data from past interactions to anticipate needs, like reminding someone about a policy lapse. In claims-heavy scenarios, service ops coordinate with adjusters to provide updates, reducing frustration. Building loyalty through seamless ops can lower acquisition costs, as happy customers refer others and stick around longer. Technology is revolutionizing insurance operations, turning paper-based drudgery into digital efficiency. Insurtech startups are leading the charge with AI for fraud detection, spotting patterns in claims data that humans might miss, or blockchain for secure, transparent transactions. Telematics in auto insurance uses car sensors to adjust premiums based on driving habits, integrating operations with real-time data. Cloud computing enables scalable storage for massive datasets, while robotic process automation handles repetitive tasks like data entry. Big data analytics predict trends, like rising hurricane risks, informing underwriting. However, integrating legacy systems with new tech is a challenge. Operations often involve phased migrations to avoid disruptions. The payoff? Faster processing, lower costs, and better risk pricing. Financial operations in insurance manage the money flow, collecting premiums, investing funds, and paying claims and expenses. Actuaries forecast liabilities, ensuring reserves cover future payouts, while investment teams grow assets in stocks, bonds, or real estate. Operations here include treasury functions like cash management and hedging against interest rate changes. In volatile markets, efficient ops mean quick adjustments to portfolios. Profitability hinges on the combined ratio, claims and expenses divided by premiums, so operations aim to keep it under 100% through cost controls and smart investing. Human resources in insurance operations ensure the right people are in place to run all this. This industry needs actuaries, claims specialists, underwriters, and IT pros, so ops involve recruiting, training on regulations, and retaining talent amid competition. Diversity initiatives bring fresh perspectives, improving innovation in areas like product design. Performance management ties to ops goals, like rewarding quick claims resolutions. With remote work rising, HR ops adapt with virtual tools for collaboration, maintaining productivity. Supply chain ops aren't as prominent in insurance as in manufacturing, but they exist. Think procuring office supplies, IT hardware, or even partnering with third-party adjusters. For health insurers, it's managing networks of doctors and hospitals, negotiating rates, and ensuring timely reimbursements. Efficient ops here reduce administrative burdens and control costs, directly affecting premiums. Innovation in insurance operations is booming, with companies experimenting with usage-based insurance, where ops track real-time data like home sensors for property coverage. Peer-to-peer models use apps to pool risks among users, simplifying ops. Parametric insurance pays out based on triggers like earthquake magnitude, automating claims without assessments. Operations teams pilot these, integrating them into existing systems while measuring ROI. Sustainability is weaving into insurance ops, as climate change amps up risks. Insurers are greening their own operations, think paperless policies or energy-efficient data centers, while offering products like green building coverage. Ops analyze environmental data to price risks accurately, encouraging clients toward sustainable practices. This not only mitigates losses but positions companies as responsible players. Global insurance operations navigate diverse regulations and markets. Multinationals coordinate ops across borders, standardizing processes where possible while localizing for laws like China's data localization rules. Currency risks and cultural differences add layers. Ops might use shared service centers in low-cost regions for back-office tasks. Brexit, for instance, forced UK-EU ops realignments. Challenges in insurance operations are plentiful, keeping things spicy. Rising cyber threats demand robust IT ops to protect sensitive data. Talent gaps in tech-savvy roles mean investing in upskilling. Cost pressures from low interest rates squeeze investment income, pushing ops toward efficiency. And let's not forget pandemics. COVID exposed ops vulnerabilities in remote claims handling and supply disruptions for medical equipment. Operational excellence is pivotal here, helping insurers drive revenue, improve margins, and manage transformation costs simultaneously. Overcoming these requires agile ops that adapt quickly. The future of insurance operations looks tech-heavy and customer-centric. AI will automate more underwriting and claims, with humans overseeing complex cases. Blockchain could streamline reinsurance contracts. Personalized policies via wearables will integrate ops with IoT data. Regulatory tech will automate compliance. As risks like climate and cyber evolve, ops will focus on predictive modeling. Inclusivity and ethics will matter too, ensuring fair AI use. In property insurance, ops handle everything from flood modeling to rapid disaster response teams. Health ops manage electronic records, telehealth integrations, and fraud via AI. Auto ops use dashcam footage for claims. Life ops focus on longevity risks and digital estate planning. Workers' comp ops coordinate medical care and return to work programs. Small insurers ops are lean, often outsourcing to third parties for scalability. Large ones have dedicated ops centers with advanced analytics. Reinsurers ops deal with mega risks, modeling global catastrophes. Nonprofit mutual insurers prioritize member services in ops. Captive insurers, owned by companies, tailor ops to specific risks. In essence, insurance operations are the unsung guardians of an industry built on promises. From ancient risk pools to AI-driven futures, they've adapted to protect us all. Mastering them means balancing efficiency, empathy, and foresight, crucial for any insurer aiming to weather the storms ahead. So, if this field calls to you, it's a blend of numbers, people, and innovation worth exploring.